And we see already that the relative strength of the ratio between the energy stocks and the S&P 500 is about to break its own neckline.
Good morning, Bruno.
Good morning, Kees.
So gold broke the 1300 level recently. Can it go any lower?
Well, there was some action recently, yesterday. We saw that this chart shows still an uptrend, number one. Number two, the correction down just reached the level of the moving average, 40 weeks, which is 200 days, which is a long-term moving average. The fact is that this moving average is rising already since already 6 months. And the movement that we had corresponds also to about 2/3 of the recent rise we had from the 1260 level all the way to 1377 levels. So at 1268, what we should probably not expect is too much more downside. Also because as we looked at the lower part of the chart, we see here the momentum on the weekly stochastics, and if we rebound here, we are going to get also a bullish divergence, which is basically saying the whole correction, which started at 1377, is probably over at 1267.
So what's happening over with oil?
Well, what we saw on gold is probably relatively isolated, because on oil and other commodities like copper, we basically have an accumulation, and soon still are waiting to break 51 level. 51 level is a head and shoulders pattern. That means once it will be above 51, there will be an objective around 75. And we see already that the relative strength of the ratio between the energy stocks and the S&P 500 is about to break its own neckline. So the signal is coming soon, along also the momentum which is rising now.
So what kind of signals are we seeing on the 10-year US rate?
At the same time, with gold with oil rising, what we got is still in the trading range between 150 and 175. The recent rise that we got early September, there was a pullback, but the good news is that the low has been at a higher level, so we're still in an uptrend, and we move back above 165, so it's basically clearing the way towards 175, and in the first quarter of 2017, probably a target of 2%. That should be good.
So has this already influenced the US financial sector?
Yes, indeed, and that's where it should be good, the best. We see the ratio of the relative strengths of financial versus the S&P is breaking its downtrend line, it's rising up, and it's about to break up also on a nominal basis and should help the S&P to rebound and come out of its correction.
So are there any other signs that the US market is bullish?
Well, you see in the different sectors, when we look at different sectors, the strength of cyclical versus defensive, when we are at the end of a correction, usually cyclicals are picking up, and that shows up, for example, here in the ratio of discretionary, which is a cyclical sector, versus staples, which is a defensive. So they are moving up in favor of cyclicals. That means that should help the S&P move to new highs soon.
So it does seem that there's not much happening with the S&P 500. What should be the next move we should expect?
Well, let's look at the daily chart first and then the weekly. On the daily charts, we are in a consolidation for about 2 or 3 weeks. We cannot exclude the fact that we might retest the 2140 levels, eventually go all the way to 2110, and then on the weekly chart we see that if we do that, we probably go and meet the rising moving average 200 days, which is the 40 weeks moving average, around 2040. But that will be probably the end of this correction, which has started mid-August. And we should remember that around mid-October, we start again the bullish seasonality for the year from October to May.
So now what's happening over in Japan?
With this seasonality moving up, what we got is not bad news for Japan. Indeed, the main thing was the yen, which is here in orange, and it was close to the 100 levels. It's backing off that level a little bit, so it's coming down a little bit. That helps a little bit the Nikkei. The relative strength at the same time is rising a little. All of that shows that we are still in an uptrend and we are above the clouds. So basically, we are waiting to break the upper resistance, which is at 17,000.
So is it the same situation in Europe?
Relatively similar in terms of trading range, because we also have a trading range between 3,100 and 2,900. We are also above the clouds. The relative strength is rising a little bit. So all of that goes in the same direction to test the upper resistance.
Now, are you still bullish on emerging markets?
Emerging market, I am still bullish because we basically have these commodities we discussed at the beginning, which are moving up, oil and copper. And also because what we've got since the whole month of September is basically a consolidation of the China market, for example, here on that chart versus the S&P. It was a relatively flattish relative strength line. But also I expect that if we look what happened before this pause, basically we had a rising movement of China versus the emerging market, and that's probably what's going to show up again later on in the second phase of the last quarter of the year.
Well, thank you, Bruno. It's always a pleasure having you in the studio.
You're welcome.
And don't forget, you can watch Bruno's previous programmes by clicking on our website. Goodbye for now.